Welcome guys in this beautiful video. So we are gonna be speaking about step index, on how you should approach it, how you should trade it efficiently or profitable as a trader. So it's not something complicated. So this knowledge that I'm gonna give to you in this video is applicable in all the other synthetic indices and even in all other markets. So it is not limited, but I'm just gonna be highlighting some key things when it comes to step index, but you can apply everything because it's also a synthetic index market. So you can use it on V75, on V50, on V25. It doesn't matter. It will work just as it works on this market. So before I can get started, guys, remember to press that like button, give me a random comment, and if you're not a subscriber, just subscribe so that you don't miss anything. I post videos frequently which are educational. So if you want to learn, if you want to improve your trading, just make sure that you are a subscriber and you have hit that bell icon. So let's get into it. The first thing that you need to know about step index is that it usually move in big waves. It usually move in big waves, and people or traders who are observing, they usually see these things. Traders who are observing, they usually see these things, that when this market moves, it tends to give bigger waves compared to all the other synthetic index market. For an example, here on step index, either it's a corrective or it's an impulsive, the market can usually give you a very bigger corrective than it's supposed to be. We know that a corrective is supposed to be less or equal to 50% of the impulsive, but in this market it's not that case. It's not that case. Usually the correctives, they're even greater than 50%. As you can see here, if I'll just make an example, this was a corrective wave. Oh my god, what's happening? This was a corrective wave, but look how big it is. It is almost the size of the impulsive wave. Same thing applied here. You can see how big the corrective waves are, how big the corrective waves are, yet they are not supposed to be at this size. So usually when this market plays out, it is very hard to predict if it's gonna stay in that particular direction for a long. As you can see, as I'm scrolling here, there is no long-term trend or maybe downtrend or uptrend. Usually the market just goes up and goes down. So that's one thing that you need to keep in mind. So what does it mean if we have some kind of bigger waves which doesn't obey actually the fundamental principles of momentum or of strength? Then it means that it's hard for you to predict the market. So then if it's hard for you to predict the market, what should you do? You should try by all means to implement very simple methods. Simple method. That's one trick, guys, that you need to know. If it's hard to predict the market, the best way for you to be successful in that market, it is keeping things as simple as possible. Don't go with the advanced stuff, because the advanced stuff is what makes the market to be a hard market to be predicted. So the best way it is to go with the simple stuff. Focus on the simple things. For an example, if you can look here, how the market played out here, you see it was obvious that the market is about to go down. If you can see here that, okay, it's a corrective and then it enters in a transition. So when the market enters in a transition, you know that it's pretty obvious that the market is gonna take the opposite direction. So that simplicity, without further analyzing, without drawing a lot of lines in your chart, without doing anything. Same thing applied here. We can see that the market was also in a key level. It was also obvious that the market is really gonna go down. So because this was support and then it became resistance, which is one key thing that we use to trade synthetic indices, support becoming resistance, or if you can call it, you can say it's some kind of retest strategies. So same thing applies here. Just keeping the thing simple, or your trading simple. You can see that here it was a support, and then boom, the market is turning it into resistance, and all of a sudden you observe just the break of the flow or the pattern that the market is correcting with. So you know that that's the most important thing, spotting the pattern that the market is using to enter in a corrective wave. Ne? So here is one thing that I want to point out, guys. Here is one thing that I want to point out. Usually you can observe this move here, that was a downtrend, and all of a sudden the market was it broke out, and when it broke out, it moved for a while without even correcting. So if you see the market breaking this upward flow, don't ever make the mistake of selling. Why? Because these buyers, they are so aggressive, they can't just die like that. So if you sell here, you assume that it's over with the buyer, so it can be over just like that. That's why maybe it came and then it they put their last try, and then it was game over after this level was broken here. So those are things that you just wanna implement, or just that you just wanna apply in your trading. Make sure that you don't just enter quickly. Although someone can say, if I bought here, I was gonna put my stop loss here and I was gonna be in the market, but the truth is you're gonna sell here, and when the market moves up, you're gonna panic and you're gonna close. So you're gonna find yourself either closing at $0 or maybe at very small losses like that. So that's how traders behave. So make sure that you enter when it is safe. The safest entry is not a late entry. Ne? It is a good entry that will make you to trade with peace. Ne? So the point of this video, guys, it is to make sure that you keep things simple. Why? Because it is very hard to predict the market because of its surprisingly appearing waves. Waves, they usually come without you expecting, and they usually become bigger than you even expect, or than they're supposed to be. So make sure that you trade with caution. Just apply this simple method, spot the key level and spot some transition. As I made an example here, it was in transition, and also here it was key levels, and here. So once you spot those simple things, just 3 principles in transition, key level, and pattern breaks, then you're good to go. So thank you for watching this video. Remember to like, share, and subscribe.